Hello and welcome to ATFX's US Jobs Data Preview. My name's Nick Twidale. I'm one of the Chief Market Analysts. Just a little bit of a summary on what's going on this week. So massive focus on the non-farm payrolls on the final day of the week. But before we get there, and this normally happens with job numbers, is we've got a few key updates from the US jobs market before we get to that non-farms. They include the JOLTs Job Opportunities, so job opportunities out there in the market. They've got the weekly unemployment claims, obviously that speaks to itself, and also the ADP non-farms payroll as well, which is traditionally a front runner for the non-farms. They kind of come in and out on correlation over the months and the years. And these front runners to the non-farms are probably going to get the big kick on the move because that will be the confirmation of what we're seeing. But these front runners can give us a very good indication on where markets are going to go and where that non-farm payroll number is going to come out. So I'm going to run through individually each one of those three different updates. So first up, coming out is JOLTs Job Openings. As I said, it's essentially jobs out there in the market in the US. Now, it's expected to come in at 7.39 million. You think that's a big number. If we get a difference between, and they're big numbers, obviously, but if there are a few 100,000 out on those numbers, as I said, 7.39 million, you will start to see traders react on that. Investors will start to, longer term players will start to react to that move, and we will see moves in the market. Now, what it will probably do is see like a relatively minor move in the market at that time, unless it's significantly off that 7.39. But it will come into people's thinking ahead of the non-farms. And once that comes through, we could see some even bigger moves on non-farm. So ADP non-farm. Now, ADP is more of a white collar update on the non-farms payrolls. It's indicative, but it doesn't cover the whole section that we get for non-farms on Friday. That's expected to come in at 78,000. Now, they have been retreating, as has non-farms, as we know. And that's where we're seeing this front run, this indicator. Last time out was 104. This time out, 78. So expected to come out around about 20,000 less. Any significant deviation on this by probably 15 plus or minus thousand, we could see some moves in the market. Now, the final one that we're talking about, unemployment claims, the weekly number, that's been flirting around 220, 230 for what feels like me about the last 18 months. Expected to come out at 230, so that's 230 unemployment claims on a week by week basis. If we get 10, 20,000 difference on that, it's showing us where we think the jobs market's going. Obviously, if unemployment claims going up, we're seeing a weakening in the jobs market. We're expecting non-farms to come down. I will just touch on the non-farm payrolls. They're also expected to come in similar to the ADP number. 75, I think, is being priced in by the market. Average hourly earnings, once again, and this is another one of those, seems to be a stuck record, 0.3% month-on-month increase. And unemployment rate is expected to tip up by 0.1% up to 4.3%. So it is coming in with this worsening in the job market. That's why we're looking for a rate cut from the Fed. We are 90% locked in for a rate cut from the Fed in 2 weeks' time. What this number will probably do, or these numbers coming out this week, will show us whether we're going to get more into the end of the year. And I think it would take a massive change of direction for actually pull back hugely on that expectation that we get that rate cut. Bear with me a second. We're just going to run through a couple of charts where there's a few good trading opportunities. And as always, if you want to keep up with what's going on in the market, please subscribe to our channel. There'll be a link surrounding this video. So this is my daily gold chart. As you can see here, we've popped up really nicely in the last few days above a resistance trend line. It broke nicely the other day. I think that was Thursday, and it's been non-stop. That represents about a 2% move from here. But today we popped up, it felt like we took out stops. As you can see, the high there, 35.0850. Previous high was 35.0005. Now, we've got some good reasoning behind this move. Expectations of the rate cut from the Fed. That hasn't kicked through to much else in the FX space, I should say. What else we've got is like a heightening of geopolitical risks across the globe. It does not look like we're going to get that ceasefire in the Ukraine. With Russia, obviously, at the moment. That seems to be escalating. So people piling into haven trades. We've hit fresh highs in gold. What we're looking from these jobs numbers, if it does show that we're worsening, it's probably locking in those rate cuts. Gold should be able to move forward higher. Not really got any levels. The only level we've really got on that time is that 35.08 that we just printed today. We'll start looking probably at some extrapolations of previous and FIBO levels, maybe moving higher. But certainly at the moment, until we see a change either in this jobs data or in a geopolitical situation, then we're seeing gold bid on dips and even bid on breaks as well as we move higher. Now we're over to the dollar yen chart. As you can see, we're middle of the range, and it's been ranging very nicely for the last couple of months. Really big ranges, it has to be said. Where we got a low down there around 146, highs just underneath 149. Expect if we start to see weaker numbers, as kind of is being priced in, it may put a bit of pressure. Interest rate differentials with the Fed cutting, BOJ hiking rates. Then we should see some movement down. Although, as you can see today, we've seen a decent move up on the daily chart so far. So from 147 up to 147.86, that's not a bad move. Resistance coming in on this 200-day moving average, and that's kind of coming in with that trend line as well. So 140, just underneath 149. Trend line resistance now moving in probably about 149.50 by the time we get to Friday. So keep an eye on that. What we think we could see with these numbers is if we do see stronger numbers, then we may see it take out some, like move into the upper ends of these ranges. Weaker numbers obviously drop down maybe to attack that 146 level. Now, Euro has potential to move, traded in the market. We're sitting kind of near the top of these recent highs. We've had a couple of tops around about 117.50. We've got the resistance trend line around about 118, and the previous high was about 118.37. There you go, 118.29. Same again. Lower numbers coming out. Start to see Euro moving higher. Could see a big break on the non-farms if we get that lower hit. Higher numbers could fill in this gap here. We could see some attack on that support levels. Obviously, I think the bigger moves are going to come on the big non-farm, but all these numbers could see some moves towards those side of the ranges and even see a break on as well. This is the Aussie chart. We're attacking recent highs and we could see a big break here. Aussie also lined up with that gold move. Gold pushing higher. Aussie tends to move higher. The dollar's coming off. It could be, from a currency perspective, this could be the one that really gets some ground in the next few weeks, especially if we see numbers coming off. First of all, we're looking for a break of this resistance trend line around about 65.80, and then we're looking at the annual high 66.24. Breaks there, that could be the one that goes. Thanks very much for listening. As I said, please subscribe to the channel, and good luck this week. These job numbers are crucial.